Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts.
Specifically, what you need to do is you need to figure out what your odds of success are. And with option strategies, because they're not plain linear trades, because they have a time component and a volatility component, sometimes it gets a little tricky. Sometimes it gets a little hairy figuring out exactly what your odds are of success. I do have some techniques for helping you figure that out that I teach to my students. And they may come up. Maybe if we have time at the end, I can talk to you a little bit about some of those. But not just your odds of success. I don't need to know just what are my odds of heads coming up. I also need to understand what the payout structure is. You know, if my odds of success are 50-50, I want to pay less than 50 cents in the coin toss example. Well, you know, really, this is the nature of being a trader. Not necessarily picking more winners than losers, although that helps, don't get me wrong. But getting edge, paying only 49 cents and not paying 51 cents. So in order to get edge, as a trader, you need 3 analyses that help you, understand basically what the odds are. And then you need to select the correct strategy, which helps you put the payout odds in your favor given the odds of winning or losing. All right, so now let's talk about gaining edge from technical analysis. Technical analysis, probably most of you know what it is that we're talking about here. Basically what we're talking about is reading a chart. Raise your hand if you typically read a chart in your trading, whether we're talking about options or otherwise. Sure, just about all of you. Sometimes we use other numerical data, but generally it's displayed as a chart, and probably we use some indicators. The goal of technical analysis, there's no experienced trader out there who's going to tell you that there's a chart that predicts the future. That's not what technical analysis does for you. What it does is it helps you understand the past so you can make intelligent decisions about the future. Oh, well, what's been going on in this currency? Oh, well, let's see. The euro was strong, and now it's, kind of weakened a little bit, and now it's this, Oh, well, looking at a chart helps give you your bearings. And then using indicators can help you give confirmation of a trend or a lack of a trend or the strength of a trend or, if it's in a channel or what. You can make more informed decisions about the future by learning about the past through using a chart. So the logic progression is as such. You look at a chart. Now, basically, when you discover some sort of an opportunity, maybe your friend says, hey, have you been watching, the Canadian dollar? So you go home and you look at a chart. Maybe you hear something on CNBC. Maybe you do a scanner, which we'll talk about in a little bit. You get to a chart, and you don't necessarily have an opinion yet. You read the chart, and you interpret that data. And then you can, by looking at that, you may find that there's a trend. You may find that there is, maybe it's in a channel and maybe it's an opportunity for an income trade or something. So now you're kind of starting to begin to form your forecast. And, reading a chart is not necessarily quite black and white. People who come from the world of not trading options, who trade stocks or currencies in the spot markets, or futures, It's not just it's going up or it's going down. There may be a bull trend or a bear trend, or it might just be simply a volatile market, like the stock market has been lately, just kind of up and down and up and down. Could be a neutral market where, there's just nothing going on. It's just really, really boring. Could be a choppy market where, you see some of these charts where it's just like, man, big range today, big range yesterday. There's not really any pattern. It's hard to tell if it's going up or down, but it's not really volatile because it's not necessarily going anywhere in any particular direction. Choppy markets can be the toughest to trade. And then, there's some other common patterns and situational patterns, like, for example, flag pattern, head and shoulders. We take a look at these, looking at either candlestick charts or open, high, low, close daily bars. We look at these things, and we can look at them at the website. I was looking at this. There's a link on the ISE's website, and you can go to, actually I've got it bookmarked, but I don't know exactly what the URL is offhand.
FXoptions.com?
That's it, fxoptions.com. Yeah. I've got this bookmarked, and I visit it frequently, although, it's kind of like on my cell phone, like,
I know.
20 years ago, I knew all my friends' numbers. Now I don't know anybody's number. I don't even know my wife's number.
It's so funny, Dan. You're right. I'm sorry, but you're right. It is funny.
Right. So, look, you can, just going to this website, you can get your bearings really easy, and you can take a look at some of the past information. This is actually a screenshot of the EUI that I just took yesterday. I think it was after the close. And so, look, you can apply your technical analyses right here within these confines. Okay. Now, I know there's a lot of people who rely very, very heavy on technical analysis, and they tell you, you don't need fundamental analysis. And then, of course, there's people who say, all I do is fundamental analysis. You don't need those charts. Every ship at the bottom of the ocean has a chart. Well, I'm here to tell you that, in my humble opinion, you do need both. Now, you can focus more on one than the other, and that's fine. But you do need both, because all a chart gives you is past information. It gives you your bearings. It helps you make better decisions about the future, but it doesn't tell you why. And granted, whether it's priced in, maybe it doesn't matter about the why sometimes in the past, but you're not making decisions about the past. You're making decisions about the future. And what happened in the past, it carries on to the future, especially in Forex, because, politics weigh pretty heavily into that, and making decisions about, interest rates, or rather based off interest rates, the economies of the countries that you're trading the currency on. You really have to look closely at the fundamentals as well, because that gives supporting details to the chart that you were viewing. And, obviously you can get a lot of this information, without even trying. I mean, you turn on CNN or Fox Business News or, Bloomberg, CNBC, and heck, talking about Forex, talking about, currencies, different countries, all the time. You can't throw a rock in any direction without hitting somebody talking about politics that affects your investment right here. And you can also, by visiting the same site that we're talking about here, you can get some really great fundamental information there as well, and research.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.